Hi guys, welcome to another episode of Global Macro Flow with Fisayo. Today's topic is as follows. Is coronavirus over according to financial markets? So we all know what's going on in the world and what is being reported in the media. But can we take a perspective of what the financial markets are saying or are doing? That's what I'm going to try to do in today's video. So I saw a tweet, and basically it was a snapshot from one of the financial news channels. So at the lower part of the picture, you see that more than 16 million Americans have lost jobs in 3 weeks. And then right there, as that news is being reported as a breaking news, we are having something else happen. The Dow, which is one of the major stock market indices in America, United States of America, has the best week since 1938. This is before the this is long time ago. Then right there, where news is being reported that 16 million Americans have lost jobs. You are having another news saying the financial markets is having its best week since 1938, and the guy who initially posted it was kind of annoyed about it. That this is I don't want to go into explanations he made about it, but the truth about it is that one of them is reporting past data, while one is obviously the financial markets discounting future information. So while the 16 million job loss is past data, it happened 3 weeks ago. The financial market is beginning to sense, or I don't is beginning to sense new information, and based on that the market is already moving to highlight that information. I'll give you an example of what I'm talking about. Before this virus hit, I mean before the virus hit the Western world. I'm talking about United Kingdom and North America, especially United States of America. You see the financial markets begin to discount that action happening. On the chart, you could see that even though we're making higher highs, you could see momentum beginning to take lower lows. The momentum on the picture there is indicated by the RSI indicator. You could see it begin to take lower lows by the trend line withdrawn, going slanting downwards, while the price was going higher, giving us a warning already that whoa. Yeah, though in the news it might look like the market is making higher highs, but there's a problem. And even before the news finally hit about the different measures and the numbers of deaths, the market had already started to decline to and break a number of key levels in the market. So it just shows you how the market is already discounting information. Even this was at the point where people, I mean, experts and politicians were saying, oh, no problem, no problem, still continue to go to Chinatown, have fun, this and that, there's no problem. But yet there was a problem because the financial markets has already begun to discount that there was problems coming. So I decided to know, since the financial market was able to discount information, it's a good idea to always, it's easy to get swamped with the news and the media and everything, but once in a while, it's always good to have an objective view of what the financial markets are saying. And even if you cannot do it yourself, that's fine. We can't do everything, but it's always good to listen to someone or people like us who are able to give you an objective view of what the markets are saying. So we've decided to do that, and doing that today, we decided to look at a couple of stocks, so airline stocks and healthcare stocks that did well when the coronavirus issues started becoming mainstream in the Western world, and also look at a couple of indexes to give us an idea, to help us to build a thesis of what to expect going on in the market. So why do we look at airline stocks? Obviously, because airlines have been hit massively with the crisis. So if there was beginning to be a change in sentiment or new information coming in, airline stocks will pick up. Healthcare stocks as well. We want to look at stocks that have benefited from the crisis, and if they start to go down or indicating that they're about to go down, then it's giving us an indication that something might be up. And then we also look at the indices, because the indices also tell us a story. Most of the world look at the indices, but it's good to look at some stocks in the indices, because stocks move, because the indices are made up of a number of stocks. It's good to look at some stocks individually, like we're doing with the airline stocks, so that they can give you an idea of what's going on even before the indices begin action that is reported in the news. So I'm going to start with the first one. The first stock we'll go with IAG, and IAG is the like call it the umbrella company of British Airways. So if you look at what's going on there, you will see that it's in a downtrend. It was a massive hit. You could see it's in a range, maybe between around the 600 and maybe 380 level. But then the recent virus issues really brought down the seeming uptrend that was beginning to emerge. But one thing that was amazing is that the market hit a low around the 1.618 Fibonacci extension level. Still shows the market is really weak. I mean, the long-term trend shows it's a downtrend, so it's hit pretty bad. But if we look at the daily chart, looking for what is going to happen over the next few weeks to months, you can see that we're beginning to have a feel for a consolidation. So a consolidation is happening around the 246 region, and prices that same Fibonacci extension region. Consolidation is beginning to happen around that point, telling us that at least even if there's not going to be a massive retracement to the upside, there's likely to be further consolidation going on. So this is not yet confirmed by momentum yet, but it shows at least there is a pulse in the market. There is not it's not sliding full down like the news or the news and the experts would like you to have. Then the next stock I went to look at, we've looked at AIG, British Airways. We looked at DAL, that's Delta Airlines. So looking at the weekly chart as well, similar story. From 2012, you can see a nice uptrend in the long-term time frame of Delta Airlines. But then with the coronavirus issues, it just broke rank, hit all the major key levels like the $46 dollar price level, hit that and broke all the way down to the 61.8 Fibonacci retracement from the lows in 2009 to the most recent high. So that's a pretty bad break. It cannot be hidden. But when you look at the daily chart, you can see that around that 61.8 Fibonacci retracement level, that's around $25.76. You can see consolidation similar to what's going on in the AIG. So that means either buyers are beginning to step in, but an equilibrium. When I talk about the consolidation, what I'm saying is that an equilibrium is beginning to be reached between the numbers and the volume of buyers and sellers. It's beginning to be reached, preventing prices from sliding lower as one would have expected based on what is being reported in the news. So we see that consolidation going on. But what is really nice about this, compared to the IAG chart, is that momentum is actually making higher lows. So though we've seen a decline in this Delta Airlines stock, gradually momentum is beginning to say no, it's not decreasing its high intensity as it was doing at the beginning. So that is beginning to tell us that a retracement might be on the cards. And if prices have a strong daily close above 25.76, I would be expecting that prices can rise back to go to the 46.67 level. If that happens, that obviously is meaning that the market is beginning to discount that this whole um, virus and lockdown might be over, and life is going to return back to the streets. I also looked at another company, AER. The stock name is AER. It's airline financing and leasing company. It's called AER Cap Holdings, and it's like an airline financing leasing company. And the reason I looked at it is that they do business all over the world. So if I could not get, like, I found out I could not really get like stocks in maybe China, Europe, or I was concerned about, legitimacy and things like that. So AEL gives me an opportunity to look at the world in terms of airlines, because they deal in business with airline companies all over the world. So similar story, you have that confluence of a key low point. You can see that key low point around 2016 of 24.80, and it's also a 61.8 Fibonacci retracement level, a very important key level. You can see price begin to bounce and consolidate around that region. So on the daily chart, we see also that region 24.8 level being a level where prices are beginning to consolidate. So there is no clear winner now within buyers and sellers, which was different from what was happening about 2 weeks ago, where it was just a down rally market. So this chart does not give you a full confirmation that a retracement is coming like the DAL chart did, the Delta Airlines chart, but it gives us a feel for where the battleground is. The battleground right now is at a $24.8 level. So if it breaks that level, if we have a massive close, then we know that a massive retracement is coming up. I need to look at a couple of Chinese airline stocks as well, but I changed my mind. I don't really know the information coming out of China, but I think with AER we've been able to provide a good feel for what the airline stocks are doing. So in the healthcare company industry, healthcare stocks, I try to find like healthcare companies that are maybe benefiting from this crisis, like maybe companies that make face masks and things like that. But some that I found, like the one in France, they are as a subsidiary of another company. Some stocks of such companies are traded on the OTC. OTC means over the counter. So by OTC markets, they are not as regulated as the main stock exchanges. So prices might be fluctuating, and the stocks might not be liquid enough for me to have an accurate view, and I don't want to give you a false view. So that's why I went and I searched, and I found this company, TDoc, and yeah, its full name is Teladoc Health Incorporated. So on the weekly charts, the stock just started trading from what I see there just before 2016. So it's a clear uptrend. You can call the kid and ask what's the trend, up or down, and the kid will tell you it's a clear uptrend. And another look at the weekly chart, I decided to look at an extension from the most recent low, well, I'll call it the most recent low, because it was a base from which a massive uptrend started. So that low is at 46.8 key level point, as you can see on the picture there, and then also the high at around 84.24 level. And then what you see is trying to look at the Fibonacci extension, and you can see the 2.618 level being a major key level from where there was a massive pushback, even when the stock tried to fall. And yes, we normally look at the 1.618 level, but because the stock is relatively new, and the 1.618 level was very well respected, it gave us some more confidence to look at the 2.618 extension level, which is around $145.70. And you can see there that obviously the market respected that level as well, and it's been in an uptrend even with the coronavirus issue. So the company obviously was looked at as a potential beneficiary from the whole pandemic. So what's going on right now? Oh, look at that. So even though it's making new highs on the daily chart now, you can see momentum beginning to make lows, beginning to give us a warning that, oh, something might be coming up. A retracement is likely on the card. So for me, that 145.7 level is so key. If it breaks that level, then it shows us that at least a major retracement, maybe to 107.84, is on the cards. And if that happens, that is telling us gradually. You can see we're beginning to construct a story that even if the trend looks like as if um on a larger scale that there's a bigger crisis in the cars, obviously with this virus. What is going on now with the pauses and the consolidation is showing that look, a retracement is likely to be on the cards. So that's healthcare stocks, T-Dog. So then I went on to look at Tesla. Why would I look at the car stock at this point in time? One thing, the reason why I'm looking at a car stock, especially like a luxury car stock, is that when an index is going up, you want to make sure if the economy is really doing well, that means people have more money to not only buy essential goods. Like when there's a crisis, like you know what is going on right now. Oh, only go out to get essential food and stuff like that. Well, and if an index is going up and it's just because of essential companies, maybe companies that sell food or companies that sell like tissue paper or something, it doesn't really tell you the economy is or things are off the brick yet. It still tells you in a way that there's still crisis. But if you see companies that are like luxury companies and things like that doing well, or their stocks beginning to go high, it's giving you an idea that things might be getting better soon. So one thing I realized over like the last 2, 3, 4 days was that anytime the index goes down, I'll see Tesla go up. Anytime I see Tesla go up, it'll be like the index come down. So I was like, yeah, I'm not really trusting this rally. But recently, I think maybe yesterday, one more day ago, the index and the what do you call it, and the stock Tesla began to go. One is going up, one is going up at the same time, one is going down, one is going down. The correlation began to come back, so that gave me a feel for okay, things might begin to get better. So on the weekly chart of Tesla, anyway, enough of my this commentary on that aspect of Tesla. You can see a kind of a range first between 143 and 279, and then a larger one between 143 and 369, which was broken to the upside in early 2020, and there was like a massive rally. And with the Fibonacci extension I've done, it hit right, the rally hit right there at around the 976.15, which was also the 4.236 Fibonacci extension level. We have to use these levels because those are like all-time highs in Tesla, and we've not seen those highs before. So yeah, we have to use them to create key levels. So on the daily chart, one thing that really shook me about Tesla, or like shocked me, was that it still remained above a long-term moving average, which you can see there on the screen there. And yeah, you can see right now beginning to even, obviously it made a low around the 369 point, but then it made a little bit of a retracement, and the prices have gone back and hit above that retracement level of that high of 500. So it shows that even though one will expect a luxury, in my opinion, a luxury car company to get more heat than what is gotten, is still holding up well. So basically, Tesla is in an uptrend, as it seems right now. So I started to look at another index. It's called FANG index. So this index is consisting of majorly tech companies, technology companies. So FANG is like an acronym for Facebook, Apple, Netflix, Google, but one or two other tech companies are also in that index as well, just to have a feel for what is going on in there. So this is the daily chart. You can see prices, yes, obviously with the crisis that came on, retraced up till the 60, I think this 61.8. It stopped at the 61.8 level around 2500, and after that it's had a little bit of a consolidation. So this is beginning to tell me that the market is beginning to price in at least a consolidation or a build up, anticipating that uh, an end has come to the I call them the draconian lockdowns on the economy and the movement of people. So what am I looking for right now? I'm looking for a daily close around the current level where there's a battle now, the 3108 level. I'm looking for a daily close, a strong daily close above that level. That would tell me that prices are actually not just consolidating but actually moving back upward, telling me that this crisis might actually likely be over. Finally, I think this is one of the longest videos I've done. Also looking at indexes as well. So the first index I'm looking at is the UK FTSE index, the FTSE 100 stock index. As you could see, the chart was kind of a mess for almost like almost 2 decades. Massive range between 3564 and 6828. 6828, yes, I'm correct. And just prices just consolidating between that range, and then it broke out in about 2017, then tried to maintain its breakout above that level, but with the virus, it hit, went back down. And you can see it based on the Fibonacci extension, Fibonacci retracement chart I've got here, from the lows in about 2002 to the highs in about 2015. You can see it retrace back to the 61.8 level around 4828, and after that prices hit back. It was a massive rejection, and then prices are consolidating a little bit. The daily chart shows this level quite clearly as well, this 5688 level, which is also a strong key level. You can see prices also like it was a previous support level in the market, this 5688 level. So I actually put on my Twitter page that I'm watching this 5688 level because it's so key. We've just had a daily close above that. I think that was last week Friday, a daily close above the 5688 level. For me, that tells me yeah, the market is beginning to price in that this crisis is over, or at least not as intense as people expect it to continue from. By the way, on the chart, that should be strong price action above this key level, not strong rise action. Yeah, the SPY, that's the S&P 500 chart, weekly chart, this massive key level around the 252.4 level. You can see prices broke down a little bit, but then it's resounded back above that level. So that level is like a 38.2 retracement Fibonacci, based on what we've drawn from the lows of 2009 to the most recent high. So you can see it's a Fibonacci confluence level. You can see prices also went there around 2018, and when there was a decline, and then it bounced back up. So that level is like a massive battleground. And even when there was crisis, when prices broke below that level, I mean, I was like, whoa, we've got issues. But then prices have gone back above that level, and they seem to be stabilizing above that level. So it's telling a different story from what the media is saying. The market is beginning to discount, beginning to grow this in me a thesis of a recovery actually coming up. So yeah, so that's a massive level for us, this 238.11 level. So far prices are above this level. For now, I can't with a straight chest say the markets are discounting for the crisis. For now, the markets seem to be giving us an idea of the crisis might actually be over. And yes, so that's it from what I've seen. I try to be as objective as possible despite what is going on. We don't take the life of just one person lost as for granted. I say, oh, it's just one life. No. The Bible says that that God takes interest in the life of every man. So we don't, as Christians, we don't take that for granted. So the breaks in the stock market, going back to the stock markets, were really bad. I mean, for long-term trends to immediately reverse would require a strong move. However, with what I've looked at, it shows that at least a retracement is on the card. Things are likely to start getting better, at least in the midterm. So what do you guys think? Let us know in the comment section. Thank you so much. God bless you. See you in the next episode.